Welcome back. We are on the investment guide talking to one of India's best known investors, Raamdeo Agrawal. Raamdeo, now, let's talk about some important topics. And I'll give you an example. Raamdeo, you invested in Hero Honda, then it was Hero Honda, of course, and you reached a point where the dividend income every year was 5 or 6x of your original investment. Now, how do you decide? You own the business, right? How do you decide this is the business that I want to own, and this is going to create wealth for me? What's the decision process? Explain to us.
Yeah. So now in last 25 years, I mean, this I did in 96, but in last, say about 25 years, we have coded the entire process as QGLP, quality, growth, longevity at reasonable price. So, when I look at a stock, I mean, the process remains same even today as it was in 95. So, when you come across a quality business, high quality business, see, one fundamental thing to understand is there are two types of business: good business and bad business. And the businesses can be so good, you cannot believe it can be just a free cash flow machine, and the business can be so bad, it can be just a dumping ground of the capital. So there are two contrasts in the businesses. You have to understand fundamentally, the moment you look at the business, any company idea comes or any thought process comes, first you have to figure out whether you are looking at a good business or bad business. Only the good businesses compound in the long term. Making money in the stock market is all about compounding. So you have to find a business or business opportunity which is not only good, but which has a compounding capability in the future. So that is one potential you are buying into. And that is, before you have started the research, first flash would be to figure out whether the business is very good and it has a long-term potential, positive potential outlook. So if something is making 100 crores, you must figure out whether it has a potential to make multiple, 25, 30, 100 times or 1,000 times of the current profits this business has the potential to make. So once, whether it will make or not, that only time will tell. But whether the potential is there or not. So that's one thing. Second is the quality of management, which is most important, because even a good business run by bad management, so 1 multiplied by 0 is equal to 0. So what you have to say is whether the management is competent or not. And so in India, you get a lot of competent management, because if the management is not competent, company is not going to make money. So you need top quality business, you need top quality management. And what are the qualities you are looking for in management? Terrific competence and good value system, terrific value system. And third, a growth passion. The guys who are wanting to make it big in life. I mean, once a company starts making 100 crores or 150 crores, then a lot of managements, they take a slow lane, or they don't want to grow, they don't want to compete. So those kind of managements cannot go far, because everywhere there will be competition, there will be a lot of challenges, but growth mindset allows you to go multiple X from wherever you are. So terrific business run by terrific management with terrific potential, this itself allows you to make a lot of money. You will make money. Now, once you have the quality business run by quality management, 99% job is done. Then once your value pack is seen, this is a value pack, then you look at the price. I mean, this particular business which you are buying today, which you have decided to buy, you said yes, both the boxes are checked in, good business, good management. Now let me look at the price, because investing is all about at what price you buy. Your purchase price will decide your rate of return, and hence you have to look at the valuation, and that's where a bit of technicality comes in, whether you are paying too much, because the margin of safety between the price and the value is very important. Nobody wants to do the hard work of estimating the value. Everybody looks at the price. Anybody looking at the price has no advantage in looking at the price. The real advantage is trying to understand the value.
Sure.
That is an art form to estimate the value of a company. Once you think that this company, which is making today 100 crores, and it can make about 1,000 crores in next, say, 10 years, 25% compounded, and the current P multiple is say 15, and if the terminal P multiple is also going to be 15, you are sitting on a possibility of making 25% compounded for next 10 years, which is a 10 bagger, and that's how you decide, okay, let me get in.
Okay.
That's how I thought when I looked at Hero Honda. There were many other things and understanding the company, but that When you get to nitty-gritty of understanding a business,
Yes.
you get into that. But it was a fantastic business on the day one.
Okay, that's the entry point. We're getting a question, Raamdeo, from Krishnadan, that okay, entry is fine, but is it important for an investor to churn the portfolio at regular levels or just stay put? And how do you decide that? That's also important.
See, what is important is to buy right. You have to buy something which is worth 100 rupees at 30, 40, 50 rupees. That is most important. And as the journey starts and you have made 5 times, 10 times, 20 times, it doesn't really matter. I mean, you didn't sell it at top. I mean, I remember when I bought Bharti Airtel in 2003 at 25 bucks. It went to 1200, and then for some reason I couldn't sell at that price, that point of time. I sold it at more like say 650 or 650 rupees. So still it was 25, 30 times, which is good enough. So you don't have to focus on churning and all those. That is not the investor attitude. This is this. Before you are bought, you are thinking about churning and all. This is not the investor attitude. This is more like a speculator attitude. So you have to be very careful where you are focusing as an investor. You have to focus on investing on the right company at right price at right time. That is more important than trying to figure out whether I should churn or this or that. That is much later. Even if you do a bad job of selling, you'll do a wonderful job of investing.
Okay. Now, Raamdeo, actually, on one hand, there is this investor who was asking about churning. On the other hand, there's one more query coming in. Let's see if we can pull that up. This one is from Suresh Ramamurthy. And he is asking you, saying, Dear Raamdeo, can you please define long-term? Many stocks that I bought are now at 10-year lows and have approached my cost price. If I had sold at the high, I could have re-entered at lower levels. I would have made some money. So I think, this is the other thing, Raamdeo. What is your definition of long-term? And should it be different in different market contexts or different economic contexts? Do you need to keep re-looking at that stock? Or is it just buy and then just hold?
No, I mean, see, the point is, if you have bought it right, and you have bought the good company, growing company at a reasonable price, generally, in the very first day, you should make money. I mean, you have to really question whether why you are not making money. Are your assumptions right? What you thought about the company's story about how it is going to develop, whether it is developing right or not. It's not about the price. See, if you are looking only at price, you are ignorant about what's the underlying business is. You should be able to make the first most important thing in investing is whether you understand the business or the company or not. That is 99% of investing. If you don't understand what you're buying, I mean, what is the underlying thing? Is it gold? Is it silver? Is it diamond? That you must know. And if the moment you know that this is what I bought and the story has gone wrong, your assumptions have gone wrong, because it's all about the future. You're buying the future. If that assumption has gone wrong, you yourself know that things have gone wrong. Whether it has gone wrong in 6 months or 3 years or 5 years, you have to figure out. I don't think you must blame the long term or short term for non-performance of the stock. I mean, stocks are all types. Some stocks are multi-baggers, some stocks are steady performers, some stocks are going just straight from 0 to 0. So you have to be in the control of your destiny, and that control of destiny comes from your understanding of what you have bought.
Welcome back. Well, we are in conversation with Raamdeo Agrawal. Raamdeo, a lot of people asking that, okay, past multi-baggers are history. What's the next multi-bagger, right? In the current market situation, what should you look at to identify the next 5 or 10x bagger? Any thoughts?
I mean, Anuj, it is so difficult to say today. If I was knowing that this is going to be multi-bagger, I would put 90% of my net worth out there. But it is the nature of the stuff. I mean, I have seen this correction taught us a lot of things. One of the things is that highest conviction stock corrected maximum. Now, where is the question of saying that this stock will be multi-bagger? So when you put a bet on the companies, typically you start with 3-4% of the portfolio. I start typically with 2.5-3% of the portfolio. And then once you are into the stock, then you start realizing that the stock is better than what you thought. And then many times what happens is the multi-bagger happens One, because of the earnings growth, and you have been able to buy very cheap. I mean, if the what I said, the formula for multi-bagger, if you are able to buy a stock with 25% growth at 12, 15 PE, and if the actually growth delivers in next 5, 6 years, you are bound to sit on a multi-bagger. And it also depends what is the multi-bagger. I would say anything which is 10x in 5 years, 6 years, or even 10 years is a multi-bagger.
Okay.
I mean, today it is, I mean, every stock we buy, I mean, in the portfolio of 20, 25 stocks, almost all of them, at least 50, 60% of them, have the potential to be a multi-bagger. Many times multi-bagger is not because what you thought. Many times multi-bagger is because of the external environment. Because what happens is you think that something is going to happen, but something happens which is far better than what you ever thought. Like you might be saying today in COVID, because of the COVID, the importance of technology or some of the companies or adoption of online. I mean, people were struggling for many years for people to adopt the online sales, and suddenly you realize that they are growing by 200%, 300%. That you never thought 3 years back, but today it is happening. What didn't happen in 3 years has happened in 3 months. So a lot of multi-bagging happens because of even external what do you call tailwind, I would say, tailwinds, and even euphoria of the investors. Like I remember in Hero Honda, we had a wonderful journey between 96 and 2003 or 2004. I stayed till 2014 in first round. But the stock never went beyond 15, 17 P multiple. The earnings growth were 25, 30, 35, 40%, but the stock never took the fancy of the market and never became very expensive. So, it all depends on your luck also at times. Multi-bagging has a lot of role of the tailwind, lot of role of the, external environment becoming very conducive in terms of P multiple, and of course the performance of the company. Bedrock is the performance of the company. Now, I'm not supposed to discuss any specific stock. That's my job. I keep finding things we have put in our portfolios, and they are supposed to be, some of them are clearly supposed to be multi-baggers, because particularly in the mid cap segment, some of the companies have come to a level, particularly in last 2 months, that there is a potential to be mini multi-baggers, if not a huge multi-baggers in next 3-4 years. So yes, but I'm not at liberty to talk so much in detail about a particular company.
Sure. That's not the mandate over here on this show, at least, Raamdeo. But I do want to ask you this. As you said, over 3 decades, you've been in the market picking stocks. You've seen multiple cycles, scams, the global financial crisis, and now this pandemic. Is there anything different about this cycle, this extent of global economic disruption? Do you think it's going to change stock picking or portfolios in any meaningful manner?
No, I don't think investing style is going to change. A lot of new opportunities will come up for sure. I mean, the opportunities which were not there, they will come up. And some of the things which are looking very good, they might also, some businesses which are looking far better than what they were, they will also to expose, particularly the ones which are leveraged, say banks or NBFCs, and many other businesses which were very leveraged, and they were looking absolutely invincible in their kind of growth story and things like that. I think there will be a lot of rethinking in the market about them. So that is the past winners. Now, the same, this pandemic will give birth to new business models, new winners, new multi-baggers, and with a new vigor. Because the economy is going to come back maybe in 21, 22 or 22, 23 with a lot more energy.
Okay.
But where the energy will be shown, and then the government is also going to change a lot of rules. There will be a lot of liberation. One of the presentation I was making just last week was don't bet against India, because last 35, 40 years, I have seen this market going 100x. Next 30, 35 year looks as promising. Now the opportunities keep coming. If you have a prepared mind, the issue is that do you have a framework of picking stocks? The stocks will walk into your framework, I'm telling you. If you are clear about what you're looking for, whatever you get to see, you have to keep saying no, no, no. And then finally, in 2 months, 3 months, 6 months time, you'll keep getting ideas. And when that idea comes to you, back up the truck and buy as much as you can buy. So it is all about the prepared mind, your frameworks, your eagerness to look at new ideas, turn as many stones as you can, and you'll find your gems.
Okay, Raamdeo, thank you so much. It's always a pleasure to talk.